So in today's video, I want to show you a tricky situation that you might find yourself in once in a while. So I will try to expose the problems attached to this particular type of market scenario, and I will also demonstrate the options you have to get out of something like this unharmed. We're going to look at an example of the euro dollar in a daily chart. I will also demonstrate a few interesting ways of determining the target of a hypothetical trade in here. So from number 1 to number 3, we can spot a clear upward trend pattern that renders low number 2 as a confirmed low in this situation. So that means the buyers from number 2 are strong enough to counteract the sellers from number 1, for example. It's visually obvious that there is more buying pressure than there is selling pressure at this particular moment in time. So between the two vectors from number 1 to number 3, we can also see a crystal clear turning point line. That notion comes from the fact that there is almost zero noise contained on the inside of those two vectors, and that allows us to identify a turning point line with relative ease. We can observe also that after number 3, price begins to drift to the side, leaving an implicit trail of upper tails that suggests selling pressure at that point. That leads us to think that high number 3 is a point where buyers exhausted themselves, and as a consequence of that, sellers started their exhaustion process as well. Remember that this is still an uptrend, so even though sellers have the momentary control of the market, buyers are still in charge of the larger move. When we see that trail of selling pressure after high number 3, we can draw a pitchfork to attempt the anticipation of the next point where buyers are going to appear. That's not an arbitrary assumption by no means, because we can justify it using the laws of physics. So in this case, we have a swinging motion that is fully described by the conservation law, for example. Notice that when price reaches the center line of the pitchfork, it creates a fractal candle that has a relatively large tail compared to its range. So that implies some buying pressure at that point. But now we have an important decision to make, and it's definitely not an easy one. Observe that there is some space between the fractal candle and the turning point line level. Because the turning point is so clear, we should be able to see buyers returning to that point. But as it turns out, a fractal candle is indicating reversal in the center line of the fork, a few pips above that. If you ever found yourself in a situation like this, you know how unnerving it can be, because if you trade on the fractal bar, you might be risking an imprecise entry, but if you wait to enter at the turning point line, you might never get filled and miss the trade. The reality is that there is no right answer in a situation like this. So sometimes price will take off from the fractal candle in the center line, and sometimes it will go deeper into the demand zone. However, in a situation like this, we can be sure about one thing, and that's the stop loss order of this hypothetical long trade position. Regardless of the entry point you choose in the trade, the correct stop loss order placement is a few pips below low number 2, because that's the last time buyers appeared in this market in any significant degree. So, assuming price will take off from the center line, which means that the fractal candle will represent the next major low in here, we can draw a series of pitchforks to project future intersection points. We can draw the most obvious fork in standard mode using the low number 2, the high number 3, and the hypothetical major low represented by the fractal candle. But we can also draw modified forks based on the same axes. So observe that the lines of forks suggest places where intersections might occur, and that's the basis to determine how we reverse engineer some of these lines. That's what leads us to draw an upward extrapolation of the red modified fork. Before I fast forward price to see what happens, notice that there are 3 areas where forks intersect in the imminent future, so keep an eye on those areas specifically. Let's fast forward price action to see what happens in this situation. As you can see, price did take off from the fractal candle in this case, but it could have done that in the turning point line as well. The essential point is that either way, your stop loss order should be a few pips below low number 2 for a logical protection. We can also observe how price action respected the boundaries established by the pitchforks. Some of these intersections could have been used as places to collapse your risk and take profit targets as well. This is a situation that goes outside the technical aspect of trading that sometimes appears to be perfect, and it goes to the more practical and imperfect side of things, which is an area that surrounds trading in a general sense, and you are definitely going to step on it once in a while, so it's wise to be prepared to these peculiar moments where arbitrary decisions cannot be avoided. So that's it for now. I hope you learned something new and interesting with this video. And if you wish to understand these trading techniques and strategies in greater detail, check out the strategy store link in the video description. As usual, if you want to support the channel and the creation of these free videos, don't forget to hit the like button, subscribe to the channel, activate the notifications button so you never miss a new video, and leave your feedback below in the comment section. Thank you for watching. Take care.